Hello and what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today we are going to get super rich. Alright, we're going to be talking about the top 5 high growth stocks of 2021. Today being March 11th, 2021. So we're going to be looking at a few really good stocks that I'm personally invested in. I'm not a financial advisor. This is all for just entertainment, but you know what? I got money in here. So you know what? Just don't sue me and it's going to be good. It's going to be good. Make sure to subscribe to the channel and turn on post notifications. And if you enjoy the video, the number one thing you can do for me is like the video. Yep, that's right. All you have to do is scroll down and click the like button. You know what that does for me? It shows my video to more people. I get more exposure as a creator. So come on, just like the video. It's so easy. And that being said, let's get right into the top 5 stocks in March 2021. Alright, how's everyone doing? We are back here today. We're looking at my Robinhood portfolio. I do not know if I recommend Robinhood, but if you are looking for a brokerage, you can always check out WeBull. Link in the description. You get 2 free stocks valued up to $1,600 a stock. So you know what? Why wouldn't you do that? But anyways, we're here at my Robinhood. I'm up 3.38% today. It's a good day. We had a rough month, but we are quickly recovering from this little setback caused by the up higher interest rates on 10-year treasuries. But we've had 2 bond auctions the last 2 days, and it seems like rates are stabilizing around 1.5%. So I believe we're going to be continuing this large growth run right now, and we're just gonna have to deal with this little setback. You know, when interest rates rise, growth stocks are not as valuable, they can't invest as much, and it's simple finance. But I'm not going to get into that right now because I know you guys want to know the top 5 picks. Alright, so the first stock I'm going to talk about is MP Materials. As you can see, we are on finviz.com. I love this website. I recommend this to everyone who's a newer investor. It helps you with everything. It has all these different values right here that you can use to analyze. It even has technical analysis that they do for you. All right, they literally do this technical analysis for you, so you don't have to do it yourself. You don't have to draw the lines yourself. You can see what the experts are putting down. All right, so MP Materials, it's basically a rare earth mining company, and it is really good because it's harvesting a lot of the lithium that's needed for these electric vehicles. And we all know electric vehicles are doing phenomenal in the stock market right now, maybe even too phenomenal. So I don't know if I personally will recommend you to buy into these new electric vehicle companies, because there's a new one almost every single day. And not all of them are going to win. And that's just the fact of the matter, that not every electric vehicle company is going to come out on top. There's going to be only a couple winners, just like there's only a few there's only a few car companies right now, and that's just how it's going to be. But with MP Materials, you have them harvesting lithium from the earth, and they can sell it to all of these companies. So they will literally be able to sell it to anyone who's producing these electric vehicles, which I find great. Also, right now, it is in a buy zone. You see, right now, it's at the lower end of this channel that it's been trading at. So I think this is a buy right now. If I wasn't already heavily invested in it around the $30 range, I would have added more on this dip right here. Alright, the next company on our list is Skills. This is a company that ARK Invest has been very bullish on, and they have been adding to it throughout this dip, and I've been adding to it as well. So I personally bought stake in this company, and I think it's a great company. They do mobile games, they host online esports tournaments, and they really do have a bright future. And as you can see, this blue line right here, they are literally right here at their support line. So this is a great place to be buying the stock if you want it for the long term. And here we are with our third top stock to buy right now. This one it's a little high for what I think you can get it at. I think you can get it at the $220 to $200 range. I personally picked up shares at 206, but I think Square is a great investment for your future. And Square's been doing a revolutionary job at basically transforming the whole fintech industry. One of the main reasons I really love Square is the leadership by Jack Dorsey. He is the CEO of Twitter and also the CEO of Square. Square has a variety of products. They also heavily invest in Bitcoin, which is one of the reasons they've had such a huge run in 2020. It made it very easy for vendors to complete transactions by their little Square tablets. Everyone's seen them at like a food truck or on the side of somewhere you've seen a Square tablet for completing transactions. They also have Cash App, which is a huge competitor with Venmo, and I think Cash App actually has a better UI, and I think more people are using it. But these aren't all the reasons I like Square. I really like them for their financials. The first thing I look at right here is they have a beta of 2.49, which means they are 2.49 times more volatile than the overall market. So that's always a good thing to look at because it's a measure of risk. This stock is more risky than the overall market. So that's one thing you need to take into consideration when buying this stock. Another thing is you look at their multiples. They have a PE of 787, which is not very good. But for a growing company, I'm going to let that slide, and you can see they have a forward PE of 120, so they're getting into that range. I think technology companies are anywhere from like 20 PE to 70 PE, so as long as it's getting lower over time, that's what you want to see. They also have some debt here, which is not always a bad thing. People like to think that debt is a really bad thing with a company, but sometimes debt's used for really good things and really good investments in the company, so I'm not going to look at that one too much. Now, this is what really got me onto Square. So in 2019, their total revenue was right here, 4,713, and it grew all the way to 9,497, and this is in millions, all right? So these are $1 billion. They have $9 billion in 2020, and I think that is really great. That's really, really strong growth. As you can see, their operating expenses increased double as well. And that is okay because operating expenses are basically investing back into the company. And if you want a stock to continue growing at this rapid pace, it's going to need to keep investing in its company. Stocks that pay dividends, stocks that do share buybacks, those aren't going to grow as rapidly because they're taking their capital that they could be using to rapidly grow their company and putting it back into the stocks, giving it out to shareholders. Basically, it's just dead weight at that point. So I like these growth companies to be reinvesting their profits and putting it back into the company. So Kopin is basically a technology company that sells these parts for headsets and wearable technology to these large corporations. And as you can see right here, they have a huge customer base of different corporations. I like to see this company have big names like Garmin, Fujifilm, Verizon, ITT, Panasonic, Motorola, FLIR, Raytheon, and Northrop Grumman, L3. These are huge clients, okay? Like these are big time players, and they're all buying from Kopin. Taking a look at this chart here, it's trading at $10 a share roughly. I got in around $9 a share, and I'm up about 10% right now. I think that it'll actually bounce down because as you can see, this pink line, that's a 20-day moving average, and typically you can see a pullback there. I don't recommend technical analysis to make your trades based off of, but it's good to find an entry and exit point in a stock. You know, if you can find a place where it seems like it's oversold, like right up here, then go for it, you know. Then we'll take a little look at their income statement. I like how their revenue has increased from 29 to 40 and from 2019 to 2020. So that's always good. That means they're rapidly expanding, and their expenses have also gone down. So this means that they're getting closer and closer to becoming profitable. And once this thing becomes profitable, it'll take off. They also just had a really good earnings call, so that's another thing that's looking good for Kopin. Overall, I really like this company, and I think it's a great investment. All right, the last one is Palantir. So Palantir is a fun one. It recently IPO'd in 2020. It's been around for a very long time. It's been on Wall Street Bets a lot. It's a hot Reddit stock. This one's a good one, and it's at a pretty good price point right now, $26 a share. You could have scooped it for even in like the 20 range recently, but as you can see, there's a huge support line right here at around, what is this, $23 a share. So if this stock, if you see it in the $23 a share range, it is a good buy. All right, so nothing really stands out to me in this section, so we're going to move right down to the financial statements. All right, so here in the financial statements, I really like their revenue increase. That's always good. Now, what sticks out to me is their selling, general, and administrative expenses went up a lot in 2020. And what this actually, for a lot of IPOs and stocks that are newer to exchanges, these selling, general, and administrative expenses do go up. And this is because there's all these costs associated with IPOs and lawyers and the whole nine. As you can see, the operating expenses also went up about $1 billion from 2019 to 2020, and I like to see that. I like to see these growth companies that are investing in themselves, and they've also been getting a lot of new clients, so that's good. I like to see them invest in themselves. I like to see them continue to take action, increase in revenue, and just so they'll be a huge company and hugely profitable, and it shows to me that they believe in themselves and they'll be a great business in the future. And seeing that this is now at $26 a share and it's seen a high of $45 a share, and it's got the backing of Wall Street Bets, Palantir can definitely take off. So this is one that I am buying, and I think it's a great stock. All right, so that'll be it for today. Those were my top 5 growth stocks to buy right now. Keep in mind, growth stocks are much riskier than a value stock or an index fund. So keep in mind that when investing, I don't want you to think that you're just going to buy these stocks, boom, moonbound. Although you do have a much better chance by buying growth stocks to go moonbound than from buying value stocks, all right? So if you enjoyed something, if you learned something, please subscribe to the channel and please like the video. Likes help me out so much. And also, if you would like to get into investing and you have not set up a brokerage already, make sure to use WeBull so you can get 2 free stocks valued up to $1,600 a share. And with that all being said, I just want to thank you guys for watching the video today, and that'll be it. Peace!